Hey tech buffs, welcome to the Monday edition of Tech Stocks Daily, where we slice through the noise with today's top market highlights. Buckle up as we dive into Apple's jaw-dropping $500 billion US investment shoutout. Discover its dazzling optics versus hard numbers. We'll explore Microsoft's data center tango amid curious shifts in AI dynamics and enviro critique. Then join us in unraveling ASML's intriguing weighty options trades and robust buyback efforts. Last, peek into Zoom's promising AI-soaked financials, signaling a future that intertwines productivity and cutting-edge tech. Exciting times, right? Let's roll. All right, buckle up tech enthusiasts because Apple just dropped a bombshell. The tech giant revealed their ambitious plan to invest $500 billion in the United States over the next 4 years. Yes, you heard that right. This is Apple's largest domestic investment plan ever, and it's setting off fireworks in the tech and business worlds. So what exactly is Apple up to with all these Benjamins? For starters, they're building a spanking new manufacturing facility in Houston specifically for AI servers. This is a massive move, as it marks a significant shift of Apple's AI server production back to US soil, which should make Uncle Sam quite happy. It's always a pleasure to support American innovation, as Tim Cook would say. The Cupertino-based company is also doubling down on its US Advanced Manufacturing Fund, bumping it up to $10 billion. Plus, they're in a hiring spree, aiming to bring on approximately 20,000 new employees for their research and development efforts across the country. That's a lot of jobs, and an impressive commitment to US-based tech development. But it's leaving some folks raising a skeptical eyebrow. Now, this announcement hits right in the middle of some geopolitical tension. Ever since President Trump's tariffs on Chinese imports were revealed, businesses have been a bit jittery. The threat of a 25% tariff specifically targeting chips gives Apple every reason to bolster its operations stateside. What ensues is sort of chess-like gambit Apple pulled to potentially shield itself from the potential fallout of these trade tensions. Interestingly, while Apple is casually throwing around $500 billion like it's spare change, several industry experts aren't buying the hype. Literally. James Canos from Kinnikos Associates pointed out that Apple's current capital base is less than $160 billion, calling a $500 billion commitment into question. Numbers don't lie, and these numbers look a bit fishy. Moreover, if you adjust for inflation since Apple's last major US investment announcement in 2021, this bold $500 billion plan is basically less shiny. Truth bomb delivered by analysts. Accounting for inflation, this level of promised spend is more of a step back than a leap forward. Meanwhile, eyeing Apple's next chess move, new MacBook Air models with their latest M4 chip are rumored to drop next month. These spicy little laptops are expected to boast serious AI performance boosts. So if you're on the market for a new MacBook Air, you might want to hold off on clicking checkout because these M4 chips are expected to give the current versions a run for their money. All in all, Apple's money move, massive as it is, comes amidst corporate juggling acts as it races to outdo giants like Microsoft and Meta in the AI space. And who can forget Google's war chest and Alibaba's keen eye on expansion? So there we go, folks. Apple's latest investments beg the question of optics versus reality. Are they paving paths for innovation, or just paving over inflation pitfalls? We'll be watching. All right, tech enthusiasts, grab your favorite gadget and let's dive into why Microsoft is buzzing in the headlines today. It's got everything to do with AI data centers, strategic maneuvers, and a sprinkle of pollution controversy. So, over the weekend, a report from TD Cowen shook the digital realm. It turns out Microsoft has been doing an about-face on its data center commitments, pulling back on several data center leases in the United States and holding back on new international leases. This development is raising eyebrows all around, given Microsoft's prior declaration to splash out a whopping $80 billion on AI data centers by 2025. Now, why is the company pulling back like it's in some tech tango routine? According to Cowen's analysts, Microsoft is batting its strategic eyes at a potential oversupply situation. In tech speak, that means they might have too many data centers for their AI ambitions. Microsoft's top guy, Satya Nadella, hinted last week that AI infrastructure may be sliding into overcapacity faster than you can say, chatbot. Now, if Microsoft is deciding to lease more data centers than build them, and now pivoting away from even those leases, it's evident that they're becoming cautious about future demand. Given their tight-knit relationship with OpenAI, there may be shifts here that lessen Microsoft's once appetizing data center hunger. But there's more. The pollution impact from these massive AI data centers also added a rogue element to the narrative. A study by UC Riverside and Caltech laid down a startling report. Big tech's data centers contributed $5.4 billion in estimated US public health costs over the last 5 years. Yikes. And Microsoft, cozy in its billion-dollar investments into AI, has been marked as a major contributor. This environmental critique brings us to another point. Can Microsoft and other tech giants go greener, or at least avoid more heavily populated areas to cut public health impacts? Well, at least they're on it. Microsoft did push back against the report's numbers, highlighting their sustainability aims. In a nutshell, Microsoft's news nod today revolves around strategic dance moves in response to potential AI overcapacity, duly mixed with eco-awareness, and mulling over how all these data centers impact our lovely planet's health tab. Keep an eye out. This could significantly influence where and how our future digital experiences get powered up. Are we on the way to more cautious tech expansion, or is it merely a chapter in Microsoft's ongoing AI saga? Stay tuned, the rest of this digital thriller is yet to be released. Hey tech lovers, today we have some intriguing stories bursting right out of the high-tech labs of ASML Holding. Yup, the big kahuna in photolithography systems and a heavyweight in semiconductor manufacturing. Grab your favorite gadget and hold on to your seats because it's all about financial moves and share buybacks. First up, ASML has been making waves in the financial markets with some unusual options activity. A total of 77 strange trades were detected, involving both bullish and bearish investors. We're looking at 31 puts with almost $2.6 million and 46 calls totaling nearly $2.85 million, so there's serious dough flying around. Approximately 40% of these trades leaned bullish, while another 40% were bearish, which leaves us with a mysterious 20% floating in the financial ether in some gray area. The sweet spot for these trades is set between a price range of $500 to $1,100, making it the dreamy land of speculative intrigue for many traders. In case you're a little rusty on your trading jargon, options trading, especially with such unusual activity, can indicate what the big players anticipate in terms of market shifts. So keeping an eye on ASML's options bubble could reveal where smart money believes the gift of silicone-based wonders is headed. Meanwhile, JP Morgan waves the ASML banner with an overweight rating and a shiny target price of $1,100. Analysts are signaling to strap in tight because they foresee the skies, not the floor. All right, slide on over to our second sizzling highlight, the shimmering regularity of ASML's share buyback program. They've strutted right out of Veldhoven, Netherlands, with a nifty update on the transactions they've tiptoed into under last year's buyback program initiated on November 10th, 2022. Now sit back and marvel. The buyback program stretches on, satiating financial appetites while keeping stocks as appetizing as warm stroopwafels on a chilly Dutch morning. Go ahead and visit ASML's site for the lowdown. All the tantalizing details spill onto your screens like maple syrup over tech waffles. This program feeds nicely into keeping the equilibrium healthy by counteracting dilution and returning capital to its brethren shareholders. Seemingly mundane for regular folk, but electrifying to investors tracking market abuse regulations and all things stock-related. So what is today's story? ASML dominates the tech ticker with daring trades and a meticulous stock buyback strategy. Whether you're thumbs-deep trading options or leisurely watching your portfolio, ASML is shaping form and function in more ways than circuits and silicon. And there you have it. Ponder over the photolithography pros as ASML crafts today's tech buzz. Keep those notifications alive for ASML's latest dips and flips. Until next time, explore tech like it's silicon candy. Zoom was in the news today, folks, because they dropped their fourth quarter and fiscal year 2025 financial results, proving once again they're not just that app you have to pay attention to during virtual meetings. Zoom is embracing the future with open arms full of AI goodies. Their financial results were largely stellar. Zoom reported a Q4 revenue of $1.18 billion, perfectly aligning with what analysts expected, like a tech nerd sock collection. But the real shocker was their earnings per share at $1.41, surpassing estimates of $1.30. This marks their 10th consecutive quarter where they've either met or beaten expectations, showing consistency that's almost as rare as finding a version of their "you're on mute" meme that hasn't been circulated around the internet 1,000 times. For you financial aficionados, Zoom's total revenue in fiscal 2025 was up by 3.3% from the last year. Their enterprise revenue saw a boost up 5.9% year over year, while online revenue took a slight dip. They've managed to keep the online churn down too, being lower at 2.8% this quarter. The company's stash of cash looks candy shop level invincible, ending with a sweet $7.8 billion. Zoom's future vision was also illuminated in this report. And it's all about AI. Join me in lifting that virtual Zoom mug as you picture their AI companion kicking into high gear as the backbone of productivity boosts across enterprises. Eric Yuan, Zoom's creator-in-chief, imagines their AI not just knowing what you want in meetings, but being almost psychic about productivity. They're forecasting revenue for the first quarter between $1.162 billion and $1.167 billion. As for fiscal year 2026, they're eyeing $7.785 to $4.795 billion. And plot twist, nope, that wasn't a typo. There's a bit of a Freudian slip in the numbers visible to eagle-eyed viewers, a $3 billion range, but hey, it means plenty of room to aim for the stars. With all these advancements, particularly that cheeky AI companion of theirs, we can't wait to see how Zoom strategically shag dances across the market in the coming quarters. This bit of pillow talk between earnings reports and AI can't help but make you wonder what the future of work looks like. And here's where you come in, my digital trendsetters. We want to know your thoughts. What do you think about Zoom's journey to becoming an AI-first company? Are you a believer, a skeptic, or just excited to see where it all leads? Leave your thoughts in the comments below. All your insights, feedback, and predictions are not only encouraged, they're downright virtual confetti to an upbeat party for tech enthusiasts. So sharpen those keyboards and let us know, what's your take on Zoom's moves, and how are you using Zoom in 2025? Share below. All right, tech investors and market explorers, let's zero in on Apple after today's bombshell announcement. Now, given all the juicy details straight from Cupertino, here's what I would consider doing. Holding off on buying, but donning a skeptical cap. In other words, it's a hold/wait and see for Apple in the short term. Here's why. Apple teased us with this mammoth $500 billion investment in US innovation over the next 4 years, right? Shiny new facilities, big hiring plans, and a commitment to bolster US tech manufacturing are all on the table. On paper, this sounds like Apple is supercharging its American operations just as geopolitical chess games impact trade landscapes, especially with current tariff drama with China. However, as our buddy James Kanos from Kinnikos Associates highlighted, when we peel back the sparkle, these numbers don't squeak as rosy under the spotlight. Apple's capital base just doesn't have the trumpets to match a $500 billion tune without raising some investment skepticism. Add that to existing IDC forecasts showing smartphone sales, Apple's primary revenue engine, on a gentle decline, and we're navigating in mixed waters. And let's not forget potential inflation adjustments, indicating that despite everything looking flashy, it might not be as impressive compared to past spending. Validators, these details may just discourage an investment rush without more solid potential returns outlined. In short, y'all, while it's exhilarating to see big stats this grand dance, let the dust settle and let analysts comfortable with green leads peel beneath such commitments. New product lines like the rumored MacBook Airs with the dazzling M4 chip can indeed bring future ops momentum, but given current narratives, pump that financial brake and laden yourself with due diligence talks. As always, lovely investors, never just take my word, nor anyone else's for that matter. Dive deep, explore those balance sheets, listen to other analysts, and most importantly, remember, invest according to your tolerance and long-term goals. Venture safely in your tech investment jungle. What do you think? Would you dive fingers first into AirPods or button down for now and watch the horizon shift? Let me know in the comments. Today's tech market activity has been quite the roller coaster. With Apple dropping a $500 billion investment reveal that leaves us questioning what's shiny PR and what's substantial platform building, it's highlighting the potential games tech giants are playing amidst geopolitical storms. Meanwhile, Microsoft is strategically sidestepping potential AI overcapacity and eco concerns around its data centers. ASML, with its electrifying trades and buyback programs, once again secures its place amid semiconductor intrigue. And Zoom, channeling their inner AI flair, showcases financial prowess and an eye on futuristic productivity tools. That's a wrap on today's Tech Ticker. If you enjoyed the content, make sure to like, subscribe, and share the video with your fellow tech enthusiasts. And don't forget to join us tomorrow for another exciting dive into the world of technology. Keep those screens locked on your favorite news in gadgets and innovation.